Remember Arconic, our old friends who's turned down a 22 and change bid not very long ago from Apollo, made Mr. Plant the CEO, at least for 1 year in the last few days, and reports earnings this morning. The earnings, not really the story, or I'll defer to Jim on the earnings.
They weren't bad.
Jim, what we also saw was this plan to separate the portfolio into two businesses, engineered products and forgings, and global rolled products.
Right.
And this is my favorite part, then we're going to spin off one of the businesses.
Yeah.
We don't know which one, but we're going to spin one off. And by the way, when we do, it's going to be to determine which will be optimized for shareholder returns.
Yeah, the other one won't be.
We're going to make a spin-off that's
release.
optimized for shareholder returns. This does have the feeling of having been rushed as a plan, I think. I think it's fair to say.
Bad term paper.
Perhaps something that they've been considering for some time. Remember, this is a company that there were hopes that they would potentially reconsider the Apollo deal. There's also been hopes that Elliott perhaps would reassert itself in some way by nominating directors. The window's still open to mount a proxy fight. What I will tell you is that seems highly unlikely. Don't forget, Elliott already has one of their guys on the board. They have a couple. They have a few seats. Highly unlikely that they will do that. So this is what you're going to be dealing with. This on a $500 million share repurchase, effective through the end of 2020. And you can see the stock has hung in there around the $18 level.
Well, it's inexpensive. Jim. It's inexpensive. But I will say this. I spent a lot of time with Klaus Kleinfeld going over the split. And a lot of time, the Elliott people, I'm familiar with them. But Klaus Kleinfeld, of course, was the former Alcoa CEO. And the whole point of the split was to go to commodity versus high value. So you want the commodity play, you got a Freeport, it's a better than Freeport. If you want an extrusion play, a developed play, you get this. That's why this thing seems wrong to me. Klaus's plan was a good one. Now, Klaus himself never got to the promised land.
Right.
There's nothing, there's no plaque, there's nothing for him on the way to it. But I would say that the important thing here is that this makes no sense whatsoever. Well, the other thing was thought out. They thought about it for a year.
This doesn't feel particularly well thought out. I certainly, in speaking to a couple of investors, that's their sense. But it may very well be the plan they follow, and we may get a spin of one of the businesses that is now being separated into essentially two portfolio.
We should get Mr. Blankenship on and talk about it.
Two portfolio companies, or Mr. Plant.
Why don't we get? No, I know that was a joke.
I know.
Mr. Blankenship clearly did not. I think he did. No,
he'll
he'll say he wanted it. I didn't mean that. I didn't slag him.
Quickly want to continue here and just visit the overall world of leveraged buyouts. Remember, we got a very large one earlier this week.
Yes.
$11 billion deal in cloud area. I'm forgetting the name. What was the name of that LBO earlier this week? Ultimate.
That was the Ultimate.
Yeah.
ULTI, not the place that I get my shampoo.
It's a Friday. Arconic, a failed LBO. However, important to note, and by the way, Elliott, kind of not that great a year last year when you think about Athena. Remember, they came at 160. They got the deal done. They're part of it. We've all talked about what happened on NXP. Arconic has not been a win.
No.
But Athena has raised the money, $4.5 billion in debt financing.
That's going to be a great deal.
For the go private, which is going to close.
It's going to be a great deal.
Very soon. And so, important to note that. And then there's another one lurking out there that at least is worthy of mention, which is Nielsen, which has quietly been pursuing a process. And I say quietly because it hasn't gotten that much attention. You can see the stock is moving higher this morning.
The fundamentals.
You hear that there are two groups there.
The fundamentals. Fundamentals don't matter?
Well, it's a very stable cash flow provider. And you've got a CEO there who once worked with the Blackstone guys, David Kenny, also a guy from Carlyle. So Blackstone and Hellman and Friedman, I believe, are one potential bidding group. Bids were due, at least one round of bids was due at the end of January. And here we are. And then Goldman Sachs' private equity arm, along with Advent, I'm hearing as well.
Wow.
Is another. I think that'd be a fairly large equity check
I just looked at the quarter.
In a takeout deal, assuming, let's call it, some people say 30, maybe even a little bit higher than that. You're talking about a $10 billion deal at least, and an equity check of size. But this one's moving along, so it is worth keeping an eye on. With Athena having been successfully financed, Dun & Bradstreet having been successfully financed, Arconic obviously falling by the wayside, and this very large LBO that we talked about on Monday that we got.